Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. For the next few minutes we're going to be looking at Tesla, and we're going to carry on with our new video format of Elliott wave analysis first and basic analysis afterwards. So what can we see here on the chart? Well, we're on the day time frame in our arithmetic scale, and we can see 5 primary waves into a cycle wave top. 1, 2, 3, 4 is a triangle, proving that it's the penultimate wave, as triangles only appear in the fourth wave of a motive wave, a B wave, or an X wave. This is a motive wave as an impulse, so we're coming up to a top. 5 waves into the cyclical top I've got marked as a cycle wave 1. It could be a cycle wave 3, I don't know. Either way, I'm happy to label it 1 because we have a reaction from the top and a 5 wave move down, and now we're working on a 3 wave move back. Now the whole idea of this is that we're setting up a short, or we're very close to setting up a short, and that's why we have a few targets we're going to look at. I'm expecting after a 5 wave move down that we will see a 3 wave move back up, which I think we are nearing the completion of, and this will be followed by another 5 wave move down. So let's just move that wave back off the chart for a moment, and then we'll come in and have a closer look at this move since the high. Let's just zoom in. Right then, we're going to come down to the 2-hour time frame so we can get a little bit more detail on the chart. So from the top we have a 5 wave move in the minor time frame. 1, 2, 3, 4, 5. Now we have a B, and we're working on a C. This would be 5 waves down, 3 waves back. This is the traditional setup we're always looking for in Elliott wave. It doesn't matter whether we're talking about 5 waves up and 3 waves back, or 5 waves down and 3 waves back. We're talking about getting back into the prevailing trend. The prevailing trend has been set by this 5 wave move down, so this is a counter trend move of 3 waves back up in corrective form before continuing the prior trend downwards. The same would be true if we were going up, 3 waves back, then continuing the prior trend. So that's what we're looking for. So let's come down now to this corrective zone here and see what we can see. Now I've got this counted as an A, B, C, 5 waves in a C into an A, but you could count this as a zigzag from the low, where we've gone 1, 2, 3, 4, 5, and then we've gone A, B, C. Now this counts better to me as an A, B, C, and then W, X, Y into the B wave, a series of 3 wave structures. 1, 2, 3. Let's just count them out quickly so you can see them. 1, 2, 3, 1, 2, 3, 1, 2, 3 into the B. From there, I believe we're in the process of finishing off the 5th minute wave of the minor C of our B wave. Okay, so I think we're very close, very close now to completing this correction. So on the chart here I have some series of straight lines, and we've got several targets to look at. Now this first yellow line is the 61.8% retracement of this initial move down into our A wave or our 1. Right, the white line is 1-to-1 parity of the A and the C projected from the B. So I should say that again. Take the A, project it from the B, and we find the C at 1-to-1 parity here. That's at 769.49. The 61.8% retracement is 761.01. The next area of potential resistance for the price if it goes through this zone is at the 78.6% retracement of this initial move down, and also the 123.6% extension of the A projected from the B. So this is our next zone. Nice little areas of confluence here. We can see on the volume profile we do have a little amount of buy-sell volume here around this purple line. Now I haven't mentioned this yet. This is the 89% retracement, but we also have a line here, an area here around the 1.20, the 123.6. A bit of a divot here in the volume around the 78.6. But what I do find quite interesting is out of all of the volume profile on the move down, is right where the 61.8 is at 1-to-1 parity with a hole in the volume. Now we often look for areas of support around peaks, but it can often be the case that where there's a lack of market acceptance of the price, you can actually get quite a violent reaction. So we're just coming up into that now, and we're very, very close. Now, the count as I have it, up until literally a few moments before doing this video, I was considering this is the 1, this is the 2, 3, 4 and 5 to come. Now, that's still possible, but having dug into this on a smaller time frame, we're just going to come down to 15 minutes now. Having dug into this on a smaller time frame, I think now actually that we're looking at something slightly different. I think we've had our 1, 2, and I think we've already had our wave 3 and our wave 4, and now I think we're working on our 5th wave, which minuet wave 1, minuet wave 2, 3 is probably coming in sometime now, sideways move into the 4, and then 5th to finish off in this area here. We have sub minuet wave here, 1, 2, 3, 4, 5, so this could be an A, B, C, possibly into the 4, or maybe this is a 3, 4 of another smaller time frame. You can see a little bump here, a little bump here, and another move up, so this could be 1, 2, 3, 4, 5 on an even smaller time frame. But there comes a point where you have to limit your labeling, otherwise you'll be here forever, going down to a 30-second chart. So suffice to say, we're closing on this major fib level of 1-to-1 parity and 61.8%. So although we might not have the exact count up to here yet, we can assume that we're pretty close. So all we're looking for now is a reaction in this null zone of no volume, no market acceptance, no buy sell acceptance here at this level. If we get a reaction from here, that's going to be pretty telling. So what are the rules that we always use in Elliott wave theory if we want to set up a trade? Well, we're looking for 5 waves in one direction and 3 wave counter trend move in the other direction, and that's our signal to short if the prevailing trend is down, or it's our signal to buy if the prevailing trend is up in that move. This is a 5 wave move down. That 5 wave move down sets an impulsive, that's a motive wave down, so that sets the trend. We've got a counter trend move in the 3, so we're looking to get short. So we've got 5, 3 on the big time frame. All we want to see now is 5, 3 on the smallest time frame that we can keep our eyes on, or we can watch. Now this is all down to how much time you have to stare at the chart as you come up to these levels. You could put your order in if you want to put an order into short and you want to put a stop on it and walk away from it, that's fine. It's all down to the level of risk you're willing to take and how aggressively you want to set up the trade. If you've got the time to sit here, you can wait to come into this area and wait for a reaction. And when you get a reaction, doesn't matter what time frame it's on, the smaller time frame you can see it, the better. 5 waves down again, just mirroring the big move, and 3 waves back, just mirroring the big move. This high, below this high, and then you short. And down we go. If everything goes hunky-dory, that's fine. You take the initial move down, the initial move back, you set your stop just above where the initial move down began in 5 waves on the smaller time frame, and you're in the trade. And that's it. If it comes back up, then we can basically assume that all we've actually seen is the completion of another wave, 3 waves, and then 5 waves back up. We can all miscount, it's always possible, but you'll be out of the trade early if that happens. If we do break through this area and continue higher, up toward the next area of resistance you're looking for is around the 78.6 and the 123.6 extension and the retracement, and you're just going to be looking for the exact same setup. We've got our big 5 down and our big 3 up, so we're looking for a little 5 down and a little 3 up, and then we short. Same deal. So if that's one way of approaching it. If you want to be more aggressive, it's down to each person is going to set up their own way of doing things. If you want to be more aggressive, you just wait for it to hit the level that you want to short from, and you go straight in and short it. Then you can set the stop at the next level if you like, or a percent, or whatever you're comfortable with, and then you're out the trade. But just be tight with it. Don't be silly. You know, same deal if the price comes up here. I personally like to wait to see confirmation on a smaller time frame, and then I feel comfortable, because then I can just set the stop above where the initial move down began. So that's all I'm waiting for now, guys. Just waiting to see that a reaction from this area. Whether it's from this area or this area, I'm just waiting for that initial reaction and retracement, and then it's time to go. Alright then, so that's how I see the Elliott wave of Tsla at the moment, potential short trade in the making. So now that we've done the Elliott wave, we're just going to wrap up with our basic technical analysis for those of you who are interested. So we're going to clear the chart, of our Elliott wave count and bring back our moving averages. We're going to move out to the weekly time frame, auto the chart, and we're going to zoom in. As soon as I can get the magnifying glass to work, we're going to zoom in on all of this price action here. Alright then, so what can we see on the weekly time frame? Well, first of all, let's bring up our indicators. We have 4 exponential moving averages on the chart, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We've already spoken about our volume profile. We have our RSI set to a 10 close, with the green 30 level representing oversold, the red 70 level representing overbought. And then we have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. We are above the 10, 20, 60, 250 again. No crossover on any of the moving averages on the weekly time frame. That's fundamentally still bullish. Okay, we're in the 40 to 60 zone, which is neutral territory in the RSI, neither oversold or overbought. And we have a cooling off of bearish momentum on the MACD for the last 3 weeks. As we can see that the candles, the bars on the histogram have shrunk in size, and the shorter term moving average is now rolling up towards the longer term moving average. So let's come down to the day time frame. Above the 10, 20, 60 and 250 exponential moving averages again, we saw the 20 and the 10 and the 20 cross below the 60 with the price below it here, and sure enough, following our basic technical analysis, when we see that happen, we get a following sell-off, which we saw here. Price closed below, then fell. Now it is moved back above the 10, back above the 20, back above the 60, tested the 10, 20 together here at this crossover and bounced. So this looks fundamentally bullish. Overall, we're still trading up into this area of a void in the volume profile here, so we should be wary that there's a lack of market acceptance here. Price could reverse quickly. Still well off our 250 exponential moving average here. Coming up towards overbought levels on the RSI, but not there yet, not quite over 70. We've had the bullish crossover here of a short over the long-term moving average. We've had a bounce here as well, which was this initial move, and then the pop here. Green bars on the histogram, another bright green bar to get today. Short-term moving average moving away from a long-term moving average. So all in all, it doesn't look too bad from a fundamental, from a basic technical analysis point of view. However, have to be a bit wary. If we come back up into overbought conditions, as we could do as we push a little higher, we are still below the previous high. If we see a significant lower high here while we set overbought conditions on the RSI, rather than that traditional bearish divergence where we have a high then a lower high and a high and a lower high in RSI, we'd actually be seeing another high in the RSI with the price being lower than the previous high. So this is normally a confirmation of momentum having broken down. We come back into overbought conditions, but it's not enough to make a new high, and then you tend to get a rejection. You tend to revisit overbought and then get and then tumble from it. Now we haven't seen that yet. So if you are a bull, then you've got to, it depends where you're in the trade. If you manage to buy the dip here, or you saw this initial move up and brought the retracement, you're still in profit. So all you've got to do is move your stop below the most recent low and you're safe. Okay, but just be wary of the Elliott wave setup we discussed earlier. We are likely heading into resistance. We're likely heading into a short setup. We have 5 waves down, 3 waves back. So if you are long, just be wary. Protect your gains. As always, this is not financial or trading advice. It's totally up to you. It's just the way I see things. Moving averages of the 10 and 20 close to crossing back over the 60 with the price above. This would be a golden cross on this time frame. So, bit of conflicting data. This is often the case when we come towards what I suspect to be a trend change. We come all the way up a long way, and then we have a change of trend, and things look like they're going to resume, but then they don't. Now, I could be wrong. There's always a possibility that the Elliott wave count is incorrect, and the price is going to make a new high. But just be wary. Alright, that's all. I'm going to leave it there, guys. Thank you for joining me in this technical analysis of Tesla. Now, if you're new to the channel and you like what you see, please subscribe, smash the like, let me know what you think in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. And before I go, quick thank you to my patrons who've recently joined. Having a great time discussing things with you on Discord. And if you are interested in becoming a patron, you can find a link to my Patreon in the description below. Whole bunch of benefits you can enjoy there. We've got 3 separate tiers. Go and have a read for yourself, see if you like it. And if you do, you'd be most welcome. Also, There's a link to my Twitter feed also in the description box below, so why not go over and follow me. And that's it, guys. I'll be back with you soon. All the best. Bye bye.